All right, good morning, Trade Pro. Morning market update for this beautiful Friday, October the 4th of 2019. This is George Fapsoff, Trade Pro Academy. Hope you guys are having a wonderful day so far. We had a really big news report. Hang on. We had a really big news report this morning and a ton of opportunity for trading so far today. So let's talk about the big news report first. Today was private jobs numbers for the month of September. All right, so the first Friday of every month. Very rarely, the second Friday, we get the latest report on jobs data for the past month. And here's how the numbers came in. So it's a threefold release. There's three things that you got to watch for. The one that the most people quote is the one that's only 1/3 of the picture, but it's the total headline number of jobs added last month. That came in at 136,000 jobs added, less than the 145,000 expected. So the headline number missed. And on top of that, there was a back month revision to the month of August from 130 to 168. So as the weeks progress and the data gets older and more, so you got to think about this. The first Friday of October gives the BLS, the Bureau of Labor and Statistics, just a couple of days to prepare the report. And as the weeks wear on, it actually becomes more accurate. So every report, they have a back month revision with the exact numbers. The back month revision was revised higher from 130 to 168,000. So if you take the back month revision plus 38,000 added to the 136, you get a beat. All right. So on the headline number, it wasn't really bearish. It wasn't bullish, sort of in line with expectation. And one thing that a lot of traders are missing is that it's a low number. All right. Remember, we had 260,000 just a couple quarters ago, and now this is at 136. So even though the expectation was more or less beat with the back month revision added in, it missed without the back month revision. It's a low number to begin with. All right. The second part of this report is the unemployment rate. And this is the one that Donald Trump just tweeted about. He said, wow, America, look at this great low unemployment rate. September unemployment rate dropped to 3.5% from 3.7%, which is a 50-year low. All right, that's a very low unemployment rate. That's actually a good thing. That's a beat. All right. Underemployment rate also fell, meaning people are finding jobs and they're getting work. All right. And then the third part of this report is the one that tells you the pay of the jobs. All right. So how many jobs are added? What's the unemployment rate? And last but not least, what is the pay rate for these jobs? This is the part that missed. All right. The expectation was for 0.2% growth on a month-to-month basis, or 3.2% annualized, and we got 0% growth and 2.9% annualized. So the wage growth has stagnated, and that was a miss in the report. So we had a beat, or we had a miss, a really strong number, and then another miss. If you take the back month revision, it's not a miss. So it's kind of a mediocre mixed report for the job side, which is good because it wasn't super bearish. A lot of analysts expected really down numbers, really negative, big red numbers. And that didn't happen, so the market shrugged it off and rallied. And in fact, it's now trying to see what we could do about this 21-quarter overnight high level. All right. Here's the cool part. Well, this isn't cool. Before we get to the cool part, let's talk about the other part of this. So what this picture is telling us is that jobs are added, unemployment rates are dropping, but the wages are low. So you have to really dig deeper into these numbers, and we're going to do that for our subscribers in just a moment. And it looks like a lot of retail jobs were lost, and the jobs that were added were lower paying, lower wage, without wage growth. All right, so that's the mixed report. On this report, the FOMC FedWatch futures went, which basically priced the probability of a rate cut or a hike. They priced the probability of monetary policy changes. It went from 88.7% yesterday that there was going to be a one cut or 25 basis points to just 82 today. So because of this not negative data and somewhat positive data, the Fed cut probabilities have gone down a little bit, but they're still in the 80s. So Fed cuts expected October 30th. All right, in other news today, the New York just did another repo, and they were able to sell or buy $38.55 billion of bonds. All right, and their repo operation smaller than the 75,000 maximum, but they're still providing liquidity to the financial system. All right, to this day, from about a week and a half ago. So we had another repo. In addition, overnight, EU will respond to the U.S. tariffs, says Germany's Maas. That's the foreign minister, Heiko Maas, told newspapers that they will react and retaliate to the United States putting sanctions and tariffs on the European Union. All right. Remember that the World Trade Organization deemed it illegal for Airbus subsidies, and so it opened the gate for the U.S. to levy these tariffs. And now European Union says they're going to respond. All right. In other news, on Apple today, Apple told their suppliers to increase iPhone production by 11%, by 10% rather, for the iPhone 11. And this is interesting because you could look at this and say, hey, Apple's getting a lot of sales in their units. We don't know anymore because they stopped reporting unit sales. Or another way to look at it, another way to look at it is anticipation of a holiday season. We got to start talking about the upcoming holidays. So they're boosting their production by 10%. That's seen as bullish. Analysts are saying, or traders saying, why would Apple boost their production of the iPhone if they're not getting increased demand for the phone, or if they don't expect increased demand? So they boosted it by 10%. It's adding 7 to 8 million units of the iPhone on top of Apple's initial plans. And I think it's for preparation for the holiday season. I don't think they're getting the demand growth now, but they're anticipating it going into the holiday season. All right. That's what we have overnight. A mixed bag of nuts. This morning's jobs report was mixed. Repo still going on, and the European Union will respond to tariffs from the United States. All right, in markets, Hong Kong is down 1%. China's closed. India's down 1.3%. In Europe at midday, London's flat. Paris is flat. Frankfurt's down 0.2%. And in the U.S., futures were down about 0.3% and rebounded off of this jobs report, hanging around the previous day close or above the previous day close at the moment. But we need to get above 21.25 to continue this rally to the upside. The last move up was on low volume. Today is a Friday, and I think we close out the week strong in the afternoon, but start with a little bit of a dump in the morning. All right, I'm seeing a little morning sell-off and then a continuation to the upside through the highs. In other markets, crude oil has rallied quite a bit, hanging around the open at the moment. Closed yesterday at 52.35. The open was 53.18. So almost $1 gain, or about 0.5% on crude oil. Gold prices were flat. Now they've lost some of that ground, went to as low as 1501.40 on this jobs report. All right, and Bitcoin's down 1.8% to just over 8,000. On the economic calendar today, we have Fed's Bostic speaking at 10:30. All right, 1 p.m. we have Baker Hughes rig count. So that's for oil traders. That's offshore drilling activity. 2 p.m. Jerome Powell will speak. 2:10 Fed's Brainerd will speak. Lau. And 4 p.m. Fed's Quarles will speak. 4:45 Fed's Esther George will speak. So we got 4 Fed speakers today on the calendar in the afternoon. And in the morning, we have a quiet session. So we're going to be moving on order flow and on technicals. And at the moment, we're still trying to price in this non-farm payroll report. All right, it's Friday today. The goal is to make some money early on and be done with it and start our weekend. We're traders. We get to enjoy shorter working days, and it doesn't make them easier than anyone else's job. In fact, it makes them harder. We take a 9, 10, 12-hour shift and condense it in just 2 hours worth of work. All right, that's what we got for you guys. I'm going to turn around and open up the trading room and set some levels, get ready for the day, and trade together. Yesterday, we had a spectacular day. We have a great string of performance so far to start October. We're going to keep it going. All right, send you guys love, joy, and happiness for the weekend. Take care. Have a great rest of your days, and enjoy your weekend. We'll see you on Monday. Take care and goodbye. All right, trade pros in the room. I'm going to send it over to our analyst desk for oil, or our oil desk manager, rather, out in Atlanta. Good jobs. I'm grateful for you, brother. That's really positive vibes that you're sending, and I send it right back to you. You guys take care, YouTube. We'll see you on Monday. Ciao. We got 2 videos coming out for you on the weekend. Goodbye. Boxy, over to you, kind sir. I'm going to host you up and tell us about oil.